Welcome to the Army Empire Podcast, your go-to podcast for insightful tips on investment strategies, entrepreneurship, and all things money matters. Join Bernard Alerte, your guide on this journey to financial freedom. Each episode will dive into expert advice, practical strategies, and inspiring stories to help you take control of your financial future. Whether you're an aspiring entrepreneur or a seasoned investor, we've got something for everyone. So get ready to unlock your financial potential and make your money work for you. And now, let's welcome your host, Bernard Alerte.
Hello. Welcome. Hey, Bernard.
How you doing? How's everything going, Liz? Excited.
I'm good. Listen, I got your slides for today, and I'm really excited about that title, The Unthinkable, when the unthinkable happens.
Yes.
So I'm looking forward to finding out what is going to be happening today. But first, let's say hello to our audience, our amazing audience who is always watching, whether they're watching live or they're watching the replay. We so appreciate you jumping on to our YouTube channel. We're saying hello to the folks on Instagram. I see that you all are jumping on there as well. And those who are watching on Facebook, you do know that there is a share button below that you can share this onto your own profile as well, so that your friends can take a look at this amazing episode where we literally dive into all things money matters, and Bernard shares his wealth of knowledge when it comes to financial stability. And we all want that, don't we all?
Absolutely.
So Bernard, what do you got for us? What do you got in store for us?
We want to have this topic. This is the first time we actually had this topic, and we've been experiencing a lot of different things past couple of weeks, as you know, been talking about it. Listen, like last week we talked about, when we helps the client with life, we hope that something ever happens. That's the last thing, but it does happen sometime. Mm-hmm. And what to do next when that happens, when the unthinkable happens, what's the next step? What should people do, right? And we've experienced that, especially the past couple months. We've had actually, unfortunately, about 4, 5, 6 clients passed away, different ages. From someone lost a husband that was in 60s, young. Someone lost a husband that was in 50s. Someone lost their son. Someone, a single mom, right, passed. So we've seen different scenarios happen, and different tragic happens when this happens. So when the unthinkable happens, what's next? What do we do next, right? Mm-hmm. And if you think this is kind of guideline to a guide to do's and don't when does happen, if that happens, what to do and what not to do. Make sense?
Okay, so this is going to be really important. We're going to want to take notes, because if it happens to you in your household, you know what to do next. But if it happens to somebody else, you know what you can let them.
You can guide
them. You could guide them.
Or share it with them. Share with someone that maybe that just lost someone recently, or in situation to kind of guide them what to do, what not to do. Yeah. So what does happen? If you look at the first slide, what happens after a loved one passes away? And there's so many emotions. If you look at the next slide, there's so many emotions that people go through. I mean, there's different things when you face a loss, right? There's a lot of grief. You lose someone that is close to you. Sometimes, let's say it could be a parent, could be, unfortunately, could be a child, could be a spouse, right? A sibling. So those things happen, and there's grief. That's the first emotions everybody goes through, is grief. And grief, there's no time frame for that. There's no real time frame for that. There's no guidelines. How should someone grieve or not grieve? Everybody's totally different, and we can't. And that's why I always tell people, don't tell people, oh, get over it, don't worry, just don't. If everybody's different, it hits everybody different. We can't tell people how to grieve, how not to grieve. We can't control. So there's grief. People go through a lot of grief. I mean, yeah. Sometimes is when the person passes away. Sometimes it's suddenly. It's unexpected. And that happens sometimes, which is, I think, the hardest part, when someone passes suddenly and unexpected. Or sometimes it's maybe they had a disease, they had an illness, for example, unfortunately, illness, and maybe people kind of saw it coming, but still hits you no matter what. It still hits you, whether someone saw it, it hits you no matter what. So that's the first emotion that people do go through. That's number one, is grief. The second one is uncertainty. don't know don't know what's gonna happen. You know, you have the person that was in your life, and sometimes the worst part, if the person's been there, like I guess financially, like a spouse that has been in there in your family, helping with the finance. Sometimes there's situations where maybe your husband passed away, where the husband took care of most of the finances, burden of finance. Maybe it's the other way around. Maybe like for example, I think about my mom, my dad never dealt with it. He was the opposite. My mom dealt with all the bills, right? He just made money, and my mom took care of everything, right? So pretty much. So that's it. That was the scenario, and my family. I'm a little different, right? Ali and I, we do things together, right? But it could be a situation where a spouse takes care of everything. So there's a lot of uncertainty when someone passes away. We have someone that passed away, and the husband owned the business, and the wife, and she doesn't know what to do. They ran the business, and all of a sudden he unfortunately passed away with a heart attack, and not unexpected, and she doesn't know what to do. So those are another emotion people go through. And the third one's fear. People that's fear, they're scared. They don't know what's going to happen. They don't know what's going to happen. They're scared. Even after they're supposed to get something, they're not going to get something. They're still nervous or scared that they don't want to make the wrong choice. They don't want to make the wrong choice. So there's a lot of fears. There's fears whether they can have enough, right? That's a fear that's real. That's what I always tell people. Listen, if you ever wonder whether you should have life insurance or not, if you have that's ever even in the back of your mind, go speak to some widows. Go speak to some widowers, and go speak to people that lost someone close to them, and ask them, should they get it? Is that something that should get? And I'm telling you, you'll see it make a big difference. So there's a lot of fear that happens. So a lot of emotions that go through that. And one thing I'm going to talk about that happens, most of the challenges that comes when it comes to, let's say, some life insurance are things that could have been prevented before. Most of the uncertainty that happens, we're going to talk, we can't control grief, but most of the uncertainty that happens a lot of times are certain things. We're going to address the last two and three. We're going to address 2 and 3. Not uncertainty is before, when the process, even through the application process, doing an app, and I'm going to share with you why. I've seen it happen a lot. So if you look at the next slide, we talk about what to consider. When a child happens, when you're naming beneficiaries, right? Beneficiaries is people know what to consider. We're gonna give a little tutorial on beneficiaries, right? Like most people purchase life insurance policy to financially protect the people they love the most. That means they have to properly designate the right beneficiaries and put them fill out the application. So sometimes when they're doing the application, for example, there's information that's very important that people don't need the general guidance on. Make sense? For example, people ask the difference all the time. What's the difference between a primary beneficiary and a contingent beneficiary? Very simple. A beneficiary, the primary beneficiaries are the ones that are going to receive the proceeds upon the insurer's death, right? Let's say someone puts their spouse, right? Most people put their spouse as a primary beneficiary. They put like me, their husband, or each other as a primary. So I mean, something happens, God forbid, the spouse becomes the primary beneficiary. That means they're the first ones to get the proceeds. Okay. Now yes. The contingent beneficiaries are the persons who will receive the benefit if all the beneficiaries pass before the insured. How does that happen? Sometimes, let's say you put each parent, put like a spouse, they put each other as beneficiary, but let's say, God forbid, they pass away in a car accident together at the same time. Okay. Now there has to be secondary beneficiaries, contingent, that are next in line, right? So contingent will be the ones that are next in line if the primary beneficiaries passes away, unfortunately. Okay.
Very good. Very good.
Very point. Now, biggest mistake people don't make, they put a primary, they never put a contingent beneficiary. And I've seen it happens already sometimes that make sure you put a contingent beneficiary, because what happens if that does happens, it doesn't automatically go to the whoever they want. It goes directly. There's no contingent beneficiaries. It goes strictly to the estate.
Wow. Okay. Somebody needs to put that in the comments. The contingent, is that how you call it? The contingent beneficiary is paramount. In other words, it is important that you assign somebody as contingent as well. So you may walk away saying, oh, good, we did this. I'm primary. These are the guys that are going to be benefited. But where's the contingent?
Yes.
Wow. Awesome. I love it.
For example, let's say you could put like a spouse could put each other, but they don't put their kids as contingent. And guess what happens? It doesn't automatically go to the kids. It's going to go towards the estate, and it's going to go to probate, and that they're going to decide how it's going to go. Then it's going to cost money. So just putting a box of contingent makes a big difference in the process, right?
All right. Yes, absolutely. There it is. Contingent beneficiary is extremely important. We know that now. So we may have to have a conversation with you because I don't think we have one, but this is something that we need to talk about.
Absolutely.
So good.
And what is the difference between revocable versus irrevocable beneficiary, right? Revocable beneficiaries are pretty much that can be changed. You can, like most beneficiaries, if it's revocable, you can change it. And you can have this person, next time you change to the other person. You can change your beneficiary all you want. It's very flexible. But one of the biggest mistakes people make, they make irrevocable beneficiary. When you make an irrevocable beneficiary designated, that means it cannot be changed. Irrevocable. So let's say, for example, I've never done that. I don't like that. Let's say if you put irrevocable, let's say they put sometimes the court, let's say there's issues with court, like someone gets divorced and there's certain stipulation that you have insurance to protect. The court might make sure you don't change that. But what happens when you put irrevocable, the only person that can change it is actually the person that's the beneficiary. Okay, has to agree. So let's say you put this person irrevocable and things change, you want to change it, you can't change it. The person that you put as irrevocable has to agree that they allow you to change for whatever reason, right? Exactly. So most of the time, you put like most of the time you put like your spouse as a primary, and you put the kids as a contingent. Makes sense, to make sure that something goes wrong. Now, there's a big dilemma which happened. What happens when you're naming minor children as beneficiaries in the policy, right? And let me tell you what happens. Proceeds of a life insurance policy cannot be paid to a minor child. They cannot be paid to a minor child. For example, let's just say if you have kids under age and you pass away, it won't be paid to a minor child, right? What would happen is if a beneficiary is a minor at the time the insured's death, now our guardian or a conservator may have to be appointed by the court for the benefit on behalf of, it's a little crossed out, but benefit of the child. So someone has to be appointed to benefit child. And we had something tragic that happened, I think about 6-7 months ago, where I think we talked about it, where the single mom passed away. She was divorced. She has 2 kids. And unfortunately, the ex-spouse there was the domestic violence issues that were happening during that time. There was a restraining order. And guess what happened? She passed away, and she put her kids, her minor daughter, as a beneficiary. But guess what? Because there's the legal guardian now becomes the dad. Guess what happened? He's gonna get the proceeds.
Wow. Yeah.
He's gonna get the proceeds on behalf of the child, but so that's tragic. So those are things that is very important to consider, and it's creating challenges. But unfortunately, you can't fight that. Automatically unfortunately, if you have a minor child, especially in a situation where you're separate, you're divorced, and things like that, you have to put certain stipulations in there to make sure that your wishes are honored, and what the purpose of making sure the kids are protected. Make sure that your wishes are honored. So there's extra layer of steps that need to happen. You may have to set up a little trust or will or something on top of that. It might be a little costly, but that's important to make sure your wishes are honored. Okay.
That's so good. That's so good. We're learning so much here. Here's a good question. If the policy doesn't have a CB, which is what we were talking about, for those that are just joining us, we're talking about primary beneficiaries of a policy. And then we think we're done. We have that's taken care of, but we need to have a contingent beneficiary. If we don't have a contingent beneficiary, that means that the insurer has passed away, right?
So the beneficiary, that the person who's the beneficiary passed away, all of a sudden, so let's say sometimes is someone someone might get policy. My single person might put their parent as a primary beneficiary. Primary is older, mom, dad passed away, unfortunately. Then who's the contingent? It
Right.
goes automatically towards the,
So what do we do if we want to change that with the policy? Do we sit with?
you sit down with the person, with the person that's set up for you, and you make sure I want to add a contingent beneficiary. Sometimes a very simple form. Sometimes they allow you to do it online, some companies, but you simple form you fill out, and you fill out the exactly. And make sure you put also one of the things on. It's good to name the individuals on a policy, and here's why. Because sometimes there's options where you can actually have all children equally, right, as a contingent beneficiary. But here's what happens. If there's a situation, right, that's out there where there's how can I say that? There's blended families sometimes. There's blended families. So unless they get along, they can agree. But let's say the biological children might say, well, they're not really they're not really blood, and it could create issues.
Right.
It could create issues. It could create issues sometimes. So it's better to take some time to name the people specifically. So when you name the person specifically, then that it can be contested. Make sense? But if you put all children, it's kind of subjective. In other words, it could create issues. Good. If there's conflicts between families, you create issues, or a child out of wedlock can come in and says, it can happen. It does.
Yeah, there you go. That's exactly what Eileen just said. Or she can show up that
I'm here, right? And guess what happens? They can say, right?
Yeah.
Right. So exactly. You can have several people. You don't have to have one person. You can have several people, as many as possible with percentage, but it just has to equal 100%. Makes sense, or whatever the base amount is. Okay. And there's also different things. There's options. You can put like a trust as a beneficiary, right? You could put options like name trust as a beneficiary. That could happen. I mean, that's rare. It doesn't have to be all the time, but trust or like a irrevocable. There's different things you can do. In other words, right? The all thing when you name beneficiaries, number one most important thing is good to review the beneficiaries. Review it. Make sure you review the beneficiaries. Okay. Make sure you update, because sometimes is the situation where the person put their spouse or beneficiary had a policy, didn't pay attention to it, and they got divorced, remarried, and never took the time to update it. Guess what happened? Who's getting the money? The spouse. The former spouse gets the fund sometime. So it's good to really update the beneficiaries all the time. This is why I like to, sit down with clients and say, listen, let's do a beneficiary update. Let's make sure the beneficiaries are correct. Make sure nothing needs to be changed.
And can you have an entity?
Yeah, you can have entity as a beneficiary. You can have a trust. You can have different. Yeah, there's different things you can do. Living trust, revocable life insurance trust. People do that too as a beneficiary.
Okay, that was a good question. That was a good question.
Make sure you speak to a tax accountant or someone like that, or a legal counsel, an attorney. Make sure that makes sense for the person. So if you look at next slide, what happened when someone passed away? There's a couple of things you have to do, right? What paperwork is going to need? There's two scenarios that everyone's going to. And when the policy is enforced, every company has something called a contestability clause. That means if the policy has been enforced more than 2 years, it's one process. If it's been for less than 2 years, that's a different process, right? Now, if the insured passed away after the first 2 years of the anniversary date of the policies was issued or reinstated, all you're going to need is a sign, like a claim form, that fill out the person's name, information, and also a copy of the death certificate. That's all they need. A copy of the death certificate that says the cause of death. That's all they need to say, right? So all they need to have a claim form. And a lot of times those once they receive all that within less than 10 days, everything's issued. So those are the easiest ones when a policy has been enforced more than 2 years, right? Now, if an insured passed away within the first 2 years of a policy from the coverage being issued, there's more to it. That now the company's going to do an investigation, make sure that everything was correct. And every company has that, right? They're going to do a beneficiary interview, make sure you are. They're going to want to look at the medical records, go back and see medical records of the person, of the insured, making sure there's nothing there that the person did not disclose. Make sense? Now, if someone passes away, natural causes, as long listen, you can have someone that does up and they're in good health at the time of application, and they develop something afterwards. That happens. Or sometimes they pass suddenly, right? They just gotta make sure there was nothing there before at the time of application. So people don't need to be concerned about that too much. You understand? As long as there was nothing there at the time of application that would not disclose. Let's say you didn't have any heart issues, or you didn't disclose you had heart issues. You didn't have anything wrong. All of a sudden, so those are things that are important, right? But after that, right, it's pretty. They do an affidavit. They do more investigation, right? And a lot of times, it just takes a little bit long. So when someone passed away less than 2 years, I always tell them, listen, they're just gonna, as long as everything's correct, it's gonna take a little bit longer, right? But it shouldn't be a problem. Make sense? But make sure you follow. Now, how are benefits paid? We're gonna spend some time on that. There's two ways you can pay benefits. They can give you a check or a lump sum, or they can open up an estate account, which some companies allow you to do. Open up and we're gonna talk more about that, right? In other words, so what an estate account is, they actually give you a checkbook. They'll open up an account. What actually the companies at the insurance company does when everything gets approved, they wire transfer the funds. If it's 100,000, 300,000, $500,000, whatever amount, they wire transfer to a bank that they use, a bank with the beneficiary's name on it. So they open up an account, a bank account, the benefits going to estate account with a beneficiary's name on it, where they can actually write checks to it. And now we're going to talk the benefits of that also, right? And also, one of the big questions people have is, can the benefits be paid to a funeral home? And the answer is yes.
This is so good. We've never, in all of the 79 episodes, we've talked so much about life insurance that we've never shared this part.
This part, exactly, how to process.
How is the benefit paid?
People need to know, right? Yes, a portion can be assigned to a funeral home, for example. Listen, now one of the concern people have, they don't have, think about, average funeral costs 5, 10, 15,000. A lot of people don't have that cash laying around, right?
Correct.
So people ask all the time, yes, you can. For example, a funeral home, especially if the policy been enforced more than 2 years, right? More than 2 years. If someone passed away, the first question I ask you, do you have life insurance? Right. And they say yes. They say what company you have it with, you name it a company. And what happens is the funeral parlor calls the company with the policy, and I'm sure the policy has been enforced. It's still enforced. And what they actually do, they do something called an assignment. What they do, they fill out the forms themselves, and what pretty much the beneficiaries have to sign off that part of the proceeds is going to go towards the funeral costs. So let's say, for example, the person is protected for $100,000 of life insurance, $100 of life insurance. What they're gonna, let's say, the funeral cost is $10,000. What they're gonna do, the insurance, the funeral parlor does that. They actually pay for the funeral upfront, right? And when everything gets processed, what they do, the insurance company is gonna send $10,000 to the funeral parlor, right? And they're gonna send the difference, $90,000 to the beneficiary. Make sense? So it alleviates you, so you don't have to worry about, I got to come up with money, I got to come up with this. And because if you do, that's fine. And we're going to talk a little more about that too towards the end, what to look out for. Right.
Yeah,
so
that's awesome. That gives
peace
of mind. It gives peace of mind to know that one is able to do something like that.
Absolutely.
Next slide.
Yeah, next slide. Now, what happens when people pass away outside of the United States, right? Which it does happen, right? See, what if an insurer passed away outside the United States, right? In addition to the requirements, right? They need a foreign death questionnaire, right? Which is different. So if someone passed away more than 2 years, they need a foreign death questionnaire, which is extra, but it should get paid. That's all they need, and it should get paid. And they gotta make sure also there was no foul play. In other words, right? In other words, the person didn't pass away because when someone passes away if they natural causes, no problem. But if they pass with foul play or they got killed, then they want to do an investigation, make sure that it wasn't funny stuff. Makes sense to be able to do that. Now, if they pass away less than 2 years, first 2 years, now there's a lot of investigation. The companies actually send an investigator to a foreign country, and they kind of do investigation, make sure that, because you know what happens if you have a third world country, anything can happen. Makes sense. So they want to make sure there's no funny stuff. The person really passed away, right? That's number one, right? The person will disappear and file a claim, and they're gonna make sure that it was no foul play, and there was no. Sometimes there's people that live outside the country, and they want to make sure they have person that have medical issues outside the country. They didn't disclose. Sometimes they come to the United States and they had medical issues and went back to their country. So the companies do that. So make sure that's correct.
Wow. Yeah. That's, I'm saying the same thing. Wow, that's
it
crazy.
does happen. The companies do that, right? And again, they will need a state account is not available for if someone number one's in US dollars, right? You're gonna pay in US dollars, not pesos or pounds or or they're gonna pay in euros. They're gonna pay in US dollars. The beneficiaries and gotta have. So if someone, let's say beneficiary comes from different country, they're gonna give them a check. Just gotta show them they have to prove this is who they are. In other words, make sense?
Okay.
Yes. So let's look at the next slide. Right now, what's the difference having a bank account versus the benefits of a state account? Number one is, let's take a look at it. Number one, when you get a live check, you control 100% of it, right? That's number one. Your bank, whatever bank you bank, Chase, bank, whatever it might be, right? And the problem with the bank, number three, you get between 0 to 1%. So if money's going there, you're getting low interest on your money, 0 to 1%, right? And also one of the things, if you want to set up an investment, it takes harder and longer time frame to set up an investment. So when people deposit a check, a physical check, sometimes it's a large amount, it takes sometimes up to 2 weeks for it to clear. It doesn't clear right away, right? It takes up to 2 weeks for it to clear. Number five, it's very easy to hack your bank. As you guys know, if you have banks, it's very easy to hack and get defrauded. Number one, you have a bank account, it's very easy. Someone can find out you have a big lump sum in there. It's very easy for them to hack it, right? Number six, when you deposit money in your bank account, you're not protected from lawsuits, judgments, or creditors, or IRS. So any of them can come in and put a judgment and take some of that money at any time. When you get your money there, right? That's number six. Number seven, it's very easy to spend. When you have this amount of money in your case, it's very easy to spend. It's because it's very visible in front of you. 90% of settlements are gone in less than 2 years. Less than 2 years, right? Usually less than 2 years. It's gone. I've seen it happen where money's gone, in other words, right? Now, versus in a state account, you control 100% of it. Same thing. You still control 100% of the money in a state account. Let's say the bank, this is one of the banks that we use, Bank of New York, which is a huge bank. Bank of New York mail that we use for the state accounts. You get high interest, sometimes 2 to 3.5%, a little bit more than you get in a regular bank. It's very easy to set up an investment because once you get the money, they give you a checkbook. They give you a checkbook. You can write checks to it, right? You can write checks to set up your investment. We had that set up when the past, unfortunately, that people that passed away, we were able to set up the investment right away. As soon as we brought the funds, we set up an investment for them, have that money grow. Number five, it's very hard to get defrauded. There's a special account. It's very hard to get defrauded, special account. And number six, which is no creditors can touch it. No one can touch that money. Money in a state account, whether you have judgments, IRS, creditors, no one can touch that money. No lawsuit, no one can touch that money. And number six. Number seven is the investment will help that money last your lifetime. One thing we help with our clients is when someone passes away, we want to make sure that money lasts you. Make sense? And it might last for a long time. So we want to put money in a state account, keep it there, and you can actually use as you need to. Makes sense. That's the benefit. Now look at the next slide. What are the do's and don'ts when a loved one passes away, right? Number one, never ever make financial decision when emotions are raw.
Ooh, yes.
Never make financial decision when emotions are raw. Sometimes when someone just passed away, never make any commitments. Never make financial decision when emotions are raw, right? Take the time. This is why we sit down with our clients, right? And we sit down with them and we make sure, listen, let's take a look at it. This is what we're gonna do. We kind of walk them through the process, take in consideration the grieving that they're going through, right? Never make financial decision. Emotions are raw. Don't go, I'm gonna go buy this. I'm gonna go. Don't do that yet. Never make when emotions are raw. That's number one. Right?
Number one. So good.
Second one is we recommend. It's very controversial. We recommend that you keep the amount of death benefits and investments confidential from friends, acquaintances, and even loved ones. It's very controversial, right? I'll tell people, do not tell people at first thing I'll tell them, do not tell anyone that you're getting this, how much you're getting. It's none of their business.
Right.
You'd be surprised about what people come out of the woodworks. Getting a couple hundred. I need help. I need to take, and I'm not saying not to want to help people, but for some reason, when people find out, unfortunately, it's sad. It's just a reality. And it's just a reality. Don't say anything, even loved ones.
Yeah. And we want a financial advisor that's going to tell us these kind of things.
Yes. I said, don't tell anyone. Do not tell anyone that you're getting this.
Yeah. So Sally is saying here that this is so important. It happened to her when her husband passed away. So it's critical that in this time when you're grieving, don't make any decisions when the emotions are raw. And again, number 2, to keep that amount confidential. So
confidential. Keep it confidential. Don't tell anyone. You don't have to tell anyone. You're not obligated to say, yes, we get something. We're working with that. That's it. And I tell people, make me the bad guy.
Oh, good. Yes, that's true.
Make me the bad guy. Says, listen, I have my advisor, my financial coach. He's handling everything. So I don't know. He's handling everything for me.
Yes.
So make me the bad guy. So let's say, because sometimes you feel bad, you don't want to say no to someone. I said, well, make me the bad guy, because my goal is to protect your interest, right? And make me the bad guy in the process, right? Number 3, yes, always negotiate with the funeral parlor. Here's the reason why. Because if you go to a funeral, they ask you, do you have life insurance? I tell people, don't tell them. Negotiate the price first. Say you're going to pay cash yourself and negotiate a price first. Then after that, you tell me you have life insurance. Here's the reason why. Because once a funeral parlor, they're there to make money. Trust me. So once they figure, she has a couple $100,000 life insurance. Okay, no problem. We can upsell. Let's charge 10, 15, 20,000. They can go. Why? Because, and sometimes you feel because you're not paying cash out of your pocket that it's okay. No, negotiate first. Negotiate what you're willing to pay. If you had the money, if you have to write a check out of your own pocket, out of your bank account, negotiate that first. What you are willing to pay, right? Then afterwards, when you settle on a price, okay, by the way, when you negotiate, then I have life insurance policy. Then then you talk about the life insurance policy afterwards. Make sense? Negotiate a price first. Okay, just like when you're buying a car. Don't just say I'm here to get a loan, because say negotiate a price first, then you get the loan for the amount that you need. Make sense? To be able to, because they take advantage of you. Yeah, they'll give you, let's get you this golden casket. I know you want your loved one with spinners or something like that. I'm joking, but I'm not joking. Let's give you, because they'll upsell you. And you pay another $5,000 to. It makes no sense, So make sure you negotiate. That's number 3. Number 4, right? Take time from grieving to gather all financial documents. Take time from grieving. Sometimes after you grieve, take the time, because sometimes people have different places before you create a strategy, because you need to find out where everything's at sometimes, right? So take some time and try to get all the financial documents. That's the thing you want to do, because maybe there's investments here, there's different things there. You need to find out so you can create a good game plan, right? And number 5, which is very important, seek guidance only from a fully licensed advisor or representative. I mean, their life insurance and investment license. Okay, do not, and I'm not wrong, because we have a lot of reps that are only life insurance, but you need to sit down with someone that's life insurance investment license, right? Because here's what's going to happen. And you see what happened when you see someone with a life insurance, they're going to sell you another life insurance product. They're going to try to sell you IUL where don't worry, you can they'll tell you money tax deferred, and you have and you put 100,000 in an IUL and lose all that money. You need to sit down with someone, and preferably someone that can set up a plan, but also preferably the one that set up the plan for your family from the get-go. Because they have more invested. If you see, I've seen that happen. I've seen that happen where, and I made that mistake in the beginning, where when I first started, I had someone that passed away, And I did not take the time to build a relationship with the beneficiary. So the brother got 400,000. All of a sudden, the family's telling, "Oh, don't talk to this guy, talk to this guy." And I'm like, "No, let's let's have that money grow for you." And that money was gone. Every family member had like their say, do this, do that. All of a sudden, money was gone, just like that. It was gone.
Wow, yeah, that makes sense because there needs to be a relationship there.
Relationship there. So I said, listen, this is why you need to sit down with preferably someone that, if someone set up the plan for your spouse, for the spouse, or get together with them, because they have more, not only they have more skin in the game, right? But they also take it more personal because they've told them, like we have someone that, like, when, listen, this person told me, they told me what they wanted that money to do for you. They told me personally, they want that money to last you for the rest of your life. We need to honor that. And I'm here to help honor that. Let's make sure we put a game plan so we honor that. The worst thing that could happen is the person passed or left you this unfortunately, I know you rather have the person instead, but it's just reality. You have that to make sure that that money can last you. To honor that person, let's make it last you. Let's make that money last you as much as we can. Make sense?
Yeah.
So this is what's important. And number 6, which is important to close it out, is make sure you don't duplicate any mistakes that might have occurred during the strategy. Maybe there's certain things that happened, that maybe things that, there was not completely in order. Make sure in your situation you don't duplicate yourself. Maybe there was a beneficiary was wrong, something that was missing. Make sure you don't duplicate the same mistake again. Make sure, you know what, this one happened, I need to fix this. So it's when something happens, God forbid, that the person, wherever I'm leaving as a benefit, don't have to go through the same process again.
Right. And make the necessary adjustments.
Exactly. Right. So, I mean, we spent a lot of time on this, but this is opening. Maybe we'll revisit that more in the future, right, on different episode. But those are the things when I've seen happen a lot, especially I've seen happen over the years, but I've seen it happen even more past 3, 4, 5, 6 months. In other words, right, where different scenario, different things that was happening, I realized we definitely need to do an episode on this.
Yeah, we can literally break down this entire episode and make like 5 episodes within it. Just with this slide alone, with the bank account and the estate account, that was crazy. All of the information that you gave us here, how one, creditors can go in and do as they please, same with IRS, but the other one, it's untouchable. So there's just a lot of information that you gave us that was critical for us to know, to understand, if we were to be in that place where the unthinkable happens.
Yes, what's next? Yes, and to know that we're there. I mean, one thing, we take our pride to make sure that when something. I mean, like I said, I do plans all the time, and I hope, and I tell, listen, I hope you live till age 100. But it does happen. That's just reality. And the more I've been doing this for 29 years, what happened? There's a lot of people that we sat down with that were a lot younger, and now they're older. So things are gonna happen. But we've seen like a range of different people. Literally, that's why it's never like, oh, people 70, 80 passed away. Most we had the past claims that we've paid, and actually in the process. Number one is one person is 65, one person was 53, one person was 29 years old.
Wow.
Right? One person was 40, 45, 46, right? So it's just a different range that happened.
This is so good. This is stuff that we need to know, to understand. You're giving us a reality check. If anything ever happens to my husband, you are the person I'm going to be talking to. Like, it makes me I had to hold back the tears as I say this, because if anything were to happen, you should already know, I have a financial coach, a financial advisor, that if something happens to anyone in my family, this is the person that I'm going to sit across, and we're going to have a conversation. And Bernard is going to say, this is what French wanted you to do with this money. This is because there's a relationship there. There's so many layers to this. Listen, y'all need to stay connected. I just shared this also on my profile as well. I hope and pray that my friends and my family members are watching this today, or that they catch the replay. Oh, he says, I feel like you're in good hands, love. Yes, indeed. Because Bernard helps take care of us and understands these things. So if you do not, let me go ahead and put a poll here. If you do not have life insurance, I'm going to tell you, listen, now's the time to get yourself protected. Just comment below, type 1 or 2 in the chat, yes or no. And we're going to revisit all of the comments and reach out to you so that you can have your conversation with Bernard, with his team. And the QR code that you also see on the screen, that is going to take you straight to his website. So if you want to know more information about Bernard, about what he does, about what this podcast is all about. I mean, we're in episode 80 next week.
Yes,
we're
80. Yes.
We're down to 100. And listen, we're going to... Yes, join us for this journey as we are on the road to 100. There's going to be some shifting, some changing, some background things, just logo change. Like, it's going to be amazing. You don't want to miss it. We want you to stay connected. But more than anything, we don't just want you to stay connected. We want you to be protected.
Yes, this is so cool. And I just got to share the story. I know we're a little bit over time, a little bit over, but I just got to share the story. This is why it's so important, the podcast, which I felt good. Got a call, like we did a podcast on IULs like last year and things like that. And we have one of our relatives and back and forth and actually saw the episode and reached out to me. And because they live in a different country. He's actually back and forth. He's dual to Canada and United States. So he's able to make sure he had a right amount of life insurance, which is right. And also for him and his spouse. And also they were about to get some IUL. They actually got some IUL for the kids and they got rid of them to set up a different investment. So to me, even though it's a different country and I'm not licensed in a different country to do, but to me, that was wow, that was awesome. I'm excited because they go in the right direction,
Yes, that's awesome. People are watching, people are getting informed, they're getting educated, and we're helping people. And that's a beautiful thing. That is ministry. And I love that. I love that so much. All right, Bernard. Well, thank you so much for joining us, folks. We will see you again. We will see you again next week, right here, the same exact channel, the same exact time, and follow the Army Empire podcast. The Army Empire is going to be so much more active lately. So you're going to start seeing the name everywhere in your notifications, and let's stay connected. We hope that you have a great rest of your week, and we will see you again next time. Thank you. Bye, guys. Bye, guys. Thank you so much. Bye-bye. This was so good, Coach. Yes. Thank you, Sally. Thank you for watching. Be blessed. All right. Bye-bye.
Yes.
Thanks for tuning in to the Army Empire podcast. If you enjoyed this episode, don't forget to subscribe and share it with your friends. Join us next week for another exciting edition, and until then, keep building your empire.